So surprisingly, a big news just came out this morning. Rocket Mortgage purchased Redfin with all the stock values. And it may not seem like a big news to you, but as a realtor, I think it's a big news. And so I'll share some key points here and not getting into too much of the numbers here, but what that means to the consumers, because that's what I care about. And I do care about the real estate industry quite a bit. Welcome back to my podcast. This is Shawn, the realtor guy from Portland, Oregon. So the Rocket Mortgage, you may see on like a Super Bowl commercial, and they have a big budget, a big backer, and it looks like they've been making some profit, but way less than 2022 when the refinancing boom was happening because of the sub 3% mortgage rate. Bunch of homeowners refinanced, and during that time they made a lot of money, and so did many of the loan officers. Now, but their business number, their number of transactions went down big time. So in a way, acquiring Redfin, which tends to attract the homeowners the first, because most home buyers, they search homes online instead of going to get pre-approved with the lender, because they don't know that yet, that you need to get pre-approved if you're going to finance to buy a home. So they go to Redfin, they check out houses, something attractive, something that they can afford by using their automatic calculator. They ended up calling the agent, and they go see, and then they realize that they need to get pre-approved first if you're not gonna pay with the full cash. So in my opinion, well, this is my opinion, the Rocket Mortgage revenue went down significantly, and they're taking sort of like offensive move by acquiring another company who is struggling because of the same reason, the low number of transactions, which is Redfin. Now, on the Redfin side of the story, when I checked the last time, in 2024, I believe Redfin lost a lot of money. And I think it was in the $100 million net loss in 2023, I believe. I mean, I can go through the detailed numbers here, but that's not the important part. I want to give you more consumer-friendly information. So I'll just sum up the research that I did. So Redfin hasn't been doing so well. And let's be honest, most of the real estate industry isn't doing so well, including my brokerage, myself. Because number of transaction is down like 40% compared to when the interest rate was about 3-4%. Now it's close to 7%. There's what we call the lock-in effect. I'm sure you heard of it, but when the home sellers have such a low the monthly payment, it doesn't make sense for them to go out and buy a house to replace a house with a similar payment. It doesn't happen. So there are a lot of less listings, and at the same time there are a lot of less qualified buyers because of the high interest rate. So just to sum this up, the overall real estate market the transaction number went down big time, close to like 50%. It's as slow as I read one article in the 1990s. It's that slow. It's actually slower than 2008 and 9 market crash. Just looking back at that 2008 market crash, there are a lot of listings because many people couldn't afford to pay the subprime mortgage, so there are tons of listings. So the buyers were really picky. They were picking and choosing. So transaction number was actually almost higher than right now. So all the real estate industry, transactions numbers down. They're letting go people. They're not making a lot of money. The refinancing is pretty much dried up right now. So for the mortgage company, they want some additional strategy to secure and fill their pipeline. And they think, getting Redfin under their belt could actually help that. It could. Now, the other thing that is that the Zillow, which is Redfin's competitor. Now Zillow has their own sort of like a partnership with the lending programs. So they're trying to make like one-stop shop. So when the buyer comes to Zillow, they search homes, they find the lender on Zillow, and they find the realtor on Zillow. So according to some of this information, 1 out of 5 home buyers are actually getting everything done within the Zillow, which I'm not sure if this is true or not, but that's the data. So I think the Rocket Mortgage is trying to do that because their refi dried up. On the Redfin side, because they've been bleeding money for the last few years, we've been hearing like layoffs like every so many months, and they don't have a big backer like the Rocket Mortgage does. So they're basically trying to get bailed out. So that's what's happening. So what happens? So what does it mean to the regular consumers? This is time when you have to ask yourself, when you get qualified for a loan, do you want to talk to the call center, like a 1-800 number, and talk to them to save money? And if saving money is really big compared to talking to a local lender, maybe you should, because saving money, what's better than saving money? But however, my understanding is that these, the national advertisement, they put really attractive rate, but when you actually talk to them, when you have a slightly lower credit score, you may not get the introductory or advertising rate. So what ends up happening is that you may actually get very comparable loans that you can get through the local lending companies or local loan officers and the box stores. So at that point, you have to ask yourself which one you want to work with. Somebody who you will never see, or somebody who you can actually have coffee with at a local coffee shop talking about your mortgage. And also you have to ask whether the home sellers and sellers agents, who they're going to trust more. Are they going to trust the 1-800 number, the box, the nationwide mortgage program with a pre-approval letter, or somebody they did the transaction with before, local lender or local lending companies, for the reliability of closing rate? Or it's just the base of the volume work, which the box stores, box lenders, box brokerage tend to do. Can the quality of work support that? That's the big question. And you as a home buyer, if you're in a multiple offer situation, you really want to think this through. What's going to give you the best chance to get that offer? Is that the box store lender or individualized, customized lender who you talk to all the time with a local reputation or national reputation? So at the end of the day, you as a consumer, you as a home buyer, you as a home seller, you need to do your due diligence. What I mean by that is you should talk to multiple lenders and always compare the rate, always compare the fee, always compare the closing rate, the consumer, the reviews, the local reputation. Talk to your, like a realtor, who's going to get you the best chance if you have to compete against like 5 other home buyers. So those are some of the like real serious questions you have to ask before going with this nationwide box lending companies. So yeah, that's pretty much it. The rest of it, in my opinion, the Rocket Mortgage is trying to get a new lead generating machine. They think the Redfin is. Maybe it is. Maybe it's not. For the Redfin, they just want some bigger pockets so they can get out of financial trouble. And then one last thought here is that I wonder if Redfin is having a hard time because of the 2024 NAR settlement. Because what it did to the buyer's broker is that buyers now have to interview and decide on who they're going to work with before they can see a house. Now the question is, are the buyers kind of reluctant to sign up with salary-based buyer's agent before they go see homes? Or do they want to sign with a buyer's agent who are full-time and not salary-based, the commission-based? For the availability, basic scale of economics, if you're salary-based, you have to, I believe, work as like a volume work. So what I mean by that is, in order to make similar kind of money, you may have to work with 20 buyers versus 7 buyers. So commission-based realtors make same amount of money working with 7 buyers compared to salary-based realtor working with 20 buyers. So at that point, it all comes down to the quality of the buyer's agent. So are the buyers reluctant to sign up with the salary-based buyers? I'm just asking, genuine question, because that is real deal, real question here. So I'm kind of going all over the board here, but I think those are some of the things that you should know. So the bottom line is always shop around for the rate, talk to multiple people, and same thing with the realtors too. Now, if you're looking for listing agent or buyer's agent, talk to at least 2-3, based on recommendation, the online reviews, their online presence, the marketing skills. And I mean, there are certain keywords that I look for. I actually had to research a realtor, the buyer's agent in Pittsburgh. And it wasn't easy to find a good buyer's agent, actually, because online is all based on the seller's agent base, which is the listing base. But when you're trying to find a good buyer's broker, it's really hard. But I do know some of the key ways to find a great buyer's agent. So give me a call if you need like buyer's agent. I'll give you those tips, and maybe I can introduce to some of the realtors that I network with nationwide. So where am I? I'll be honest, the transaction number has been down for myself, my own brokerage, my local colleagues, but there are still transactions happening. 60% of transactions is still happening. And so at this point, when you are buying, always interview and vet multiple lenders, multiple buyer's agents. If you're a seller, same thing, you need to interview multiple agents. And who's going to give you the best advice, best pricing, best net price, not just people who are going to promise you a higher listing price and then try to do price cut after that, like 3 weeks. So you need to know who you're going to work with, and you need to interview multiple people. I guess that's what I'm just repeating all over again. Just interview multiple people, do the research, and find the right people. If you need help finding whether the seller's agent or the buyer's agent in your local town, you just want the tips, just let me know. Send me a DM or give me a call too. I don't mind it. Or if you want me to do the research for you, I'll be happy to do it for a referral fee, which we can get as a broker. So anyways, I'll leave it there. But to me, this is 2 struggling companies try to combine forces to survive. That's how I see it. So thanks for watching. Hit the like button and subscribe if you haven't. Have a great day, and I'll see you in the next video.